I'm 680 News senior business editor Mike Eppel. Less than a year after we saw the closure of Sears stores in this country, could be happening in the United States as well. Sears Holdings, the operator of Sears and Kmart stores in the United States, today filed for Chapter 11 bankruptcy protection. They're going to basically liquidate another 143 locations in the United States and keep the stores that are actually making some money open. At least that's the business plan laid out by Eddie Lampert, the hedge fund operator from Chicago who bought Sears back in 2005, merged it at the time with Kmart, but has really never put enough back into the stores to make it viable. It's been losing money since 2011. Of course, closed the Sears operations here in Canada late last year and early into 2018. And now they're looking at the potential end to what was once the biggest retail brand in the United States. It was founded back in the late 1800s. At one point, of course, was massive, had the Sears catalog, owned the tallest commercial building with the Sears Tower in Chicago, but started to fall on hard times once the internet retail revolution started in the early 2000s. Well, this is Weed Week in this country with the legalization of cannabis set for Wednesday, and today we saw the pot stocks popping at the TSX. Canopy Growth, the biggest player in the segment, jumped by 9% after announcing it was buying a company out of Colorado, but only for research and development purposes. Canopy's spending $400 million in cash and stock to buy Ebu Holdings. And they say they're not going to do any production or anything of that nature. It's just for R&D because they don't want to run afoul of the federal laws regarding cannabis sales in the United States. But Canopy was up by 9% today. Aurora and Afria and every other stock pretty much in that sector moved to the upside in anticipation of legalized cannabis sales and the potential revenue windfall. And we also saw today some statistics out of the Bank of Canada regarding how optimistic Canadian business operators are. They did a survey of business executives in the third quarter, and the index came in close to the highest on record. And that was a surprise, considering that was in the midst of all of the NAFTA renegotiation deadlines. But Canadian businesses basically weathered that storm. Their biggest issue right now is not a lack of demand, it's actually finding skilled workers. Canadian business executives saying their biggest challenge going into 2019 is a labor shortage of skilled workers, and that it could actually curtail their sales. Nevertheless, the Bank of Canada will use this as a data point, as another positive signal on the Canadian economy. Likely be looking at an interest rate hike next week. From the 680 Newsroom, I'm Mike Eppel for City News.